This will be extremely useful for anybody out there looking to start investing in the stock market. If you're a beginning investor and you're just wondering where the heck to start, it's a very confusing landscape to navigate, or really even to know where to start. Guys, welcome to the Independent Investor Channel. My name is Ryan. We're filming from New York City, New York. It's good to be with you guys. This is going to be called my levels of investing. When we're talking about this stock market, I like to break it down in a little more common language so that we can talk amongst ourselves about where you are at in your particular phase or level of investing, all right? And I think it's critical to speak very, very simply to make sure that you guys are aware of what level you're in currently and not try to jump into a level that you're not prepared to enter into, all right? So what I'm gonna do is I'm gonna walk you through these different levels, kind of explain a little bit of what I consider to be kind of some of the intermediate or beginning, intermediate, and advanced steps or the levels. I've broken this down into three categories. The real ground rule here in this particular exercise for any new investors is to think about it in this perspective. We cannot move from one level to the next without satisfying the conditions of the previous level, okay? What I mean by that is once you get up here into the top level of investing, you're always gonna have the same responsibility that you did in level 2 and level 3, okay? Or level 1, okay? So we cannot move from each level until we've satisfied the conditions of each of the previous levels, okay? So what I talk about all the time is the importance of budgeting and saving. And this comes in the first level. People are asking me all the time, you know, I've got $1,000 to invest. What should I invest? Well, a prudent move could be to not invest at all. If that's your only $1,000 that you even have, should you really even be talking about buying single stock? I see this all the time. People start a Robinhood account, they put their entire $1,000 in there, they buy NVIDIA, and it goes down 30%. And they're like, Jesus, and they get turned off of the market and they never want to invest again. They think that they're somehow cursed, and they think that somehow they made the stock go down, or somehow they're a loser. They're not. They just approached the stock market in an incorrect, non-calculated manner. And this is the particular stage right here. I kind of call this the planning stage, and that's level 1, all right? It's level 1. And within level 1, what you're gonna do is you're gonna do two different things, all right? Number 1, you're gonna save, all right? You're gonna save. And there's really only one way that I know to save, all right? Something that can help you save is to do up a budget, all right? There's plenty of applications out there. I'm not gonna tell you what it is to cut out of your budget or cut back on in your budget. Only you and you alone can look at your particular budget and decide what it is that you want to cut back on and what you want to keep in your budget, okay? And a lot of people are going to keep their cell phone number 1, right? I don't think I would cut mine out now as I've been sold on the importance of having a smartphone, especially in New York City. I'd never be able to find anything, all right? Even the grocery stores. So I use mine all the time. That would be an expenditure or a luxury expense that I'm not going to cut out of my budget. But really, this phase here, if you guys are at all have an inkling about getting involved in the stock market, you have to address this phase first. You cannot just go out there and frivolously jump into these two upper levels without spending some time here, okay? Now, you guys may ask me, what is the appropriate time to spend in level 1? And my response to you is, however long it takes, okay? This may be something that based on your income, you may want to spend a couple years in this particular phase. You may really, really want to have it as a practiced art. You really, really want to practice what you preach, right? If you want to cut back on going to the restaurants 4 times a week and maybe cut back to once a week. I mean, I never eat at restaurants. I think it's a waste of money. It's a waste. We buy groceries, okay? That's what we do. And we save a pile of money. Some of that money goes into the stock market. That's fine. I cut my hair at home. I don't go spend $40 on a haircut. I get it cut at home. So some ideas that you can really take a hard look, but what I'm talking about is don't think that you can do this level 1 here with regard to saving and budget overnight, okay? That's not going to be possible. Unless you guys have $10,000 saved, you have a specific budget and you stick to it, and you've got a practiced art, and investing has just been something that's been kind of on the shelf for a long time, okay, then maybe I'll go ahead and tip my hat to you and say, I think we're ready to go ahead and enter into level 2. But for the majority of people, if you guys are watching this video and you haven't invested in one particular piece of stock and you don't have any savings built up, take a hard look at what you've got. I'm trying to provide content that's valuable for all people. And I know people are coming from different walks of life, but guys, I don't come from money, okay? I had to work for everything that I've had. So I don't feel bad telling you that if you don't have money, then you do in fact need to save money, just like I did in my life. I made the decisions to you know, my first investment account, how I got this piece here in level 2. The way I started both of my retirement accounts is I sold my Mustang convertible that I didn't need for $3,000. I took half of that money, $1,500 went into my account, and $1,500 went into my spouse's account. That's how I started, all right? So I don't have a whole lot of sympathy if you guys want to drive a $40,000 Camaro out there, right? And you also want to invest in high-risk stocks, okay? You need to start at the ground level first. And for all intents and purposes, we are going to consider level 1 to be just that, okay? Now, level 2. Assuming that everything in level 1 is complete and you have a nice nest egg and you have your budget under control, all right, now we go ahead and enter into level 2, which is the passive level. It's the passive investment stage of anybody's career. Now, if it's taken them a couple years to get out of level 1, no problem, no problem. We're all just living life here, guys. We're trying to do it a little bit better than the day before. That's really what it comes down to. I get it. I'm a realist, okay? So when we're passing into level 2, this responsibility doesn't go away, but these 2 items right here I find are critical. The critical decision. I talk about it all the time on this channel with regard to putting yourself on the right path. And this is where a lot of people fall short right here. And it's with this right here. It's with starting the right account. If you can just do yourself one favor and start the right account, don't invest anything. Don't do it. Research. Research all the brokerage houses. Research more than what I recommend. I'm looking at Fidelity, TD Ameritrade, Vanguard, mine is Merrill Edge, right? You research those, but research ones that I'm not recommending. Fine, USAA. I don't care. But just research it and make sure that the account makes sense for you. Here's the thing. I want you to start the account that is going to stand the test of time going forward. We cannot falter in this program 10 years down the line and be like, God, I just heard it from some crazy YouTube guy 10 years ago. What was I thinking? No. This is a solid plan that's going to be good for the rest of your life. And if I'm doing my job correctly, it'll be the only plan that you ever initiate in your entire life. Start the account. And a lot of people, they want to invest, but they'll never show the initiative enough just to even start the account. I don't have time for those people. I don't. I only have time for those folks that really understand the benefits of investing and investing on your own. I will go the nth degree for you guys. I really will. If you guys will meet me halfway, I will meet you 50% and I will show you how to do it. All right. But starting the account is a big move on your part to kind of show me that you're ready to go, And the second piece to it is when you start to separate what you think you know about money, okay? What I mean by that is if you're used to taking $1 out of your wallet and you're used to taking that wallet and you're spending it on a pack of gum for $1 and you get the benefit out of eating that gum and chewing it away and you've thrown all the wrappers away, you've lost the $1, but you've got some benefit out of that $1. You need to change that entire philosophy about how you approach investing, and especially about how you think about money. Honestly, because a lot of people I see are deficient in this category in that they look at the inflows and they look at the outflows. They live paycheck to paycheck, paycheck to paycheck, because the only thing that makes sense to them is to take dollar in and decide what type of value I'm going to get out of that $1 of buying power, dollar out. That's the piece that I see. And that's why a lot of people have problems with. A lot of people will get this done where they'll start the right account, but then coming over here and it's like, whoa, hold on a second, man. You mean I've got to give up $100 a month to start funding this account? And it's really, really difficult for people to do that. Here's why. The human mind is a very, very powerful thing, and it doesn't take a whole lot of time for you to get mentally conditioned to think one way, right or wrong. Okay, right or wrong. We get into these habit-forming behaviors, right? Where we want to buy that pack of gum every single week, and we're going to buy that pack of gum because we know what little bit of rate of return we're going to get on the enjoyment of chewing that gum, right? So we're going to continually do it. And it's really hard sometimes to break away from those bad habits of how we spend money, all right? So this is a really, really important piece here to where we're starting the account and we're funding the account, okay? Now, when we fund the account, that's when we go ahead and we solidify phase 2 with entering into passive investments. And a lot of people are asking me, what stock can I buy forever? Guys, I give you recommendations on what stock. That honestly is, and I say it all the time, is the easy part to investing. Taking the decision and buying Kraft Foods because you're interested in Kraft Foods, or buying AT&T or Verizon or Apple or Microsoft or Cisco or IBM, I can keep going and going. McDonald's, Home Depot, Lowe's, any of these great companies are going to make you money over time, right? Costco, Walmart, Wells Fargo, Citigroup, JP Morgan Chase, all these really good companies out there. But if you're a non-participant in the market, that's where you're going to remain. You're going to remain a non-participant over here chewing gum all the time, okay? But if you want to participate in the market, you have to make the decision here to enter into passive long-term investments. And there's a reason for that. Anybody that has less than $25,000 or $50,000, or depending on the account that you start, certain incentives will kick in at those thresholds. For me, it's $50,000, and you guys will be there. I responded to an individual this morning on the particular channel platform that talked about how long it would take to get to 50,000. After 10 years of funding at 5,500, you've got 55 grand there with zero appreciation, zero. So you could potentially get to 50,000 within 10 years. That to me is extremely motivating. If I heard that, I'd be like, wow, that's incredible. Sign me up. That's amazing, right? That's what I want you guys to get excited about, is to know that those thresholds that will come down the line, and not to get short-sighted into going into Robinhood right away, okay? Start the right account first, knowing that we're going to meet those thresholds. Enter into passive investments to start. There's so much mental conditioning that's going to come out of that. And I'm dealing with it with a lot of my students too, who are like, I'm invested. It went down a little bit today. Boy, I tell you what, that was really heart-wrenching. Why? Why is it heart-wrenching? Emotion has nothing to do with investing. I say it all the time, right? You have to let it go. You have to let go. Trust the decisions that you make when you enter into these passive assets within this account, and let them grow. Let them grow. In phase 2, this is where all the funding is going to happen. This is when you're going to set these good single stocks up for dividend reinvestment. This is when you're going to enjoy some of those dividends. Have you ever been paid a dividend? Raise your hand if you've ever been paid a dividend. I made 5 grand last year just on dividends. Free money, 5 grand. Have you guys ever been paid a dividend? Do you know how awesome that feels to be paid a dividend? This is what we're talking about. We're setting up the money machine here to pay you dividends for the rest of your life. For the rest of your life. It's something to be excited about. It really is. So when we start this passive avenue, this intermediate step here really is one of the most important critical steps, and there's a lot of avenue here for misstep. There really is. There's a lot of opportunity, but if you guys just listen to the message, start the account, fund the account, buy long-term passive assets. I can't break it down any simpler than that, all right? Then we're ready to enter into your investor/trader, all right? And this in level 3, once you're in this level 3, this is kind of like the VIP club, all right? And what I mean by that is if you start acting a fool in the VIP club, I'm gonna kick you out, all right? If you think just because you're up here in the VIP club as an active investor, that somehow gives you permission to go out and buy a luxury Ferrari, I'm probably gonna kick you out, especially if you fall victim to not upholding your responsibility in level 1 and level 2. Once people get up here and they start owning single stock and they start to enjoy a little bit of riches, let's say they turn that account from 50,000 into 100 grand. Guys, 100 grand really isn't that much money. It isn't. In the long scheme of things, what are we trying to do? We're trying to get financial security. How many of you guys think that you can honestly live off of $100,000 when you retire someday? And just look at inflation alone with regard to answering that question, all right? I'm trying to set you guys up for 7 figures, not 6, all right? 7 figures, not 6. And when you start to get up to those 6-figure accounts, you start getting, basically, you fall on tilt and you start going crazy and you're like, man, look at this. This is great. I'm going to go buy a sports car. Man, I've won the battle. No, you're not. You're falling off the wagon, all right? So when you get up to this stage up here, this is what I consider the active level, all right, the active level. And this is where it takes a lot of mental discipline to stick to the plan, dig down deeper, become a better grinder, honestly, become a better, more informed stock analyzer. Pay more attention to the market. Why? Because this level demands that level of responsibility of you as a self-directed investor. It really does, all right? Stick to the plan. Keep accelerating those profits. Understand why these decisions were made in these baselines as to why you can enjoy being up here in the active category, all right? Now, if you end up prematurely exiting the first 2 levels and you want to jump right in here to active trader/investor and you get overzealous in a few positions and they adjust back on you, don't hesitate to revert back to the previous level. Always come back to the previous level to kind of redefine your baseline, guys. Redefine your baseline. I don't want anybody to rush to this passive level or this active level 3 and then come back to me and say, Ryan, you got me in the stock market. It was all your fault. And I'm going to come back and I'm going to point to this right here and I'm going to say, did you proceed to the next investment level, right? In a responsible manner, and you have to be honest with yourself. You have to be honest with yourself. And just in closing, guys, this active level 3 up here really comes with entering into short positions in stock trades. That's how I do it. It doesn't mean that you can't buy options within your retirement account. I do not trade options. It doesn't mean that you can't get a little bit more riskier with your portfolio, no more than 5% of your total overall holdings in more of an aggressive, maybe small cap names, maybe some aggressive technology names. Maybe now is a good time that you add some Amazon to your portfolio. Maybe now it's time to add some NVIDIA at a 5% clip in your portfolio. It's level 3 to where some of those advanced trading techniques take place. Guys, thank you so much for tuning in to this levels of investing video. I really hope this is one of those core investor videos for beginners, and I really hope this hit home for you guys that are looking to get involved in the stock market for the first time. Really, just in summary, we do not want to proceed to the next higher level in investing without getting a really good handle on the preliminary levels as we kind of progress as an investor. Guys, hit the subscribe button for me. If you want to leave your comments at the bottom of this video, I will get back to you. I respond to all my comments in depth. I really appreciate all your guys' viewership. If you know somebody out there that's looking to start or get started in the stock market, share this information with them. I've taken some time in kind of helping you guys maybe break down all 3 levels of investing, right? right? And this can really kind of help you guys identify what level or what current phase you guys are currently in before you enter the stock market. Guys, thank you so much for tuning in, and good luck in your investment future.